Hello, this is Dale. Let's continue our education of my three-principle method of trading. This is a laser-focused system to unlock profits in any markets: stocks, options, ETFs, Forex, even futures. This session, part 10, I'm going to be going over our 2019 returns and how you can look at expected returns. This is a robust method of trading. We've been performing for many years. I've been teaching this for 10. In all those 10 years, we have been profitable, and our members likewise have been profitable. Again, my name is Dale Brethauer. I've been a trader for a long time. This is how I've made my money, how I continue to make my money. However, I've always had a passion for teaching, and I love to work with people that want to be a success in this very difficult arena, whether it be for retirement, supplementing your retirement, supplementing your current income, teaching your children how to do it. These are all good reasons, and I love working with people. I'm the founder of www.optionsinfinity.com, which I believe is the very best education, stock option education website available today. We specialize in credit spreads, which I think is the best way to generate income on a consistent basis. These are our returns from 2019. This equity curve is similar to what we have year after year. You can see that the equity curve, we do have some losses. We do actually have strings of losses. Losing is part of the game. There is no holy grail. There is no 100% strategy. But what I teach is that when we get into a trade, we know when we're going to exit with a loss. And we religiously take that and cut our losses short. In the meantime, we're letting our profits run. And that gives us an equity curve that continues to be in the positive direction. Now, let me review an equation that was taught to me many years ago. And this was a way of calculating expected returns per trade in the future. What this requires is that you have a lot of data, and the more data you can put into this equation, the better it is. Basically, the equation is you take your profitable percent times what do you make when you are profitable? Then your losing percent times what do you lose when you have a losing trade? Once you have that, you can take that times the trade size. Once you have that, you can take it times the average number of trades you have per year to give you an expected return per year. A robust system will perform positive year after year after year after year. We do have a robust system. This is what I teach. It's a very simple system. I like to keep it simple. I think the simpler, the easier it is to execute the trades. This is from actual data from 2019 with our credit spreads on the weeklies, monthlies, and leaps. And I'm just looking at a small account, just a small account. What could have we done with a small account? Well, I would want to, according to the trade size that we taught back in, let's see, what was that, part 7, with a $5,000 account, we can put on $1,000 for monthlies and leaps. Remember, this is 30 days from expiration. These are about 120 days from expiration, with about a 10-point spread in our strike prices. And $500 on the weeklies. And here we focus in on the SPX. And we're looking at about a 5-point spread and an expiration of about 10 days. In 2019, we had 64 trades. So this is enough data for us to plug into this formula and see what the expected returns were. We can always compare them to what you did do. And then you can say, well, going forward, this is a robust positive expectation strategy. All I need to do is learn it, focus on it, and execute it. We had 72% winners last year, 72% winners, which is a little bit less than what we average. However, 72% is not bad. When we did have a winner, we made about 10.5% of margin. With only 28% losers, when we did lose, we cut our losses short, and that's only about 6.5% of margin. Times $777 per trade. And that is a mixture of what we had on the monthlies and the weeklies. You can see rather than $1,000, if it were all monthlies and weeklies, and rather than 500, if it was only weeklies, it's 777. When I multiply this out and subtract it from this and take it times this, I have an expected return every time I make a trade of $44.60 per trade. And this is for a very, very small starter account. If I take that times the 64 trades, I come up with $2,854, which is 57% return on your account. Compare that to just the SPY. The SPY, the Standard & Poor's 500, had a good year last year. It was up 15.2%. We were up 57%. Okay, this is a very powerful formula. You need to keep a trading journal, write down when you have winners, when you have losers, so that when you come up with the number, the percentage of winners and how much you win when you do have a winner, you've got enough data in there that it's a statistically sound number. And I'm looking usually at about 30 trades or more. Well, you'll start, and the more trades, the better for this equation. But when you use this and you come up with a positive expectation strategy, then you know you have something that you can continue to learn and hone and have it for the rest of your life. I wanted to go over this because, you know, I've been talking about how we do this and the tools we use and so forth. And I wanted to review just how we did. And I looked at last year. We've done this for the last 10 years. If you want to learn more, just go to www.optionsinfinity.com and scroll down to about the midpoint, and everything we've been talking about in this 12-part series sorry for the phone call, is right here in PDF form. I've been giving you a little bit more information on actual trades that we made, on the expected return and so forth. But this is nice to have in PowerPoint form. And all you have to do is click on the button to review. If you like what you see, remember, you can become a member. You can learn. You can earn while you learn. And you can follow me. I'm a professional. Follow me and follow the trades that I make. These trades I make in my own personal account. When I see a trade that I'm going to make, I send out alerts to all our members. These are weekly, monthly, and leaps, vertical spreads, stocks, and occasionally Forex. All these trades are then posted on the website, and you can see how we're doing. We don't hide anything. Once a week, we have a members meetup. This is taught by me. It's about an hour. It's Tuesday, noon Eastern time. Go over a lesson, then we look at all our trades. We answer any questions. And then Thursday and Sunday, I have follow-up member reviews. These video blogs were voted one of the top 10 blogs worldwide by Feedstop. I hope you join me and enjoy the journey to becoming a successful trader. I hope to see you in the room. Bye-bye now.